Hey, Rick Soukoulis here. Time for a little bit of mortgage math. I've been on this series on sales, and I'm going to stay on that. I got a little surprise at the end here. But I am going to do some math this morning, too, and talk about some industry things. But I do want to tie it back into our overall sales. So what I'm going to talk about today is the brokers' industry's outlook. Mortgage brokers particularly. You know, almost half of the people that watch my videos are mortgage brokers. So I want to speak specifically to you. And to stay on the sales side, I'm going to speak specifically to your need for ready price. So I'm going to try to do that today in a way that is not only entertaining, but gives you some information, but is a little bit persuasive. And we'll see at the end whether or not I've met my goals. But let me start with a conversation I had earlier this week with Gary Malice. Gary runs capital markets for PRMG. If you don't know Gary, brilliant guy, articulate guy, friendly guy, smart guy. I mean, just a class guy. Right. And we were talking about how long do you think, this market is going to stay like this? And Gary said, 6 to 12 months, we're going to have interest rates where they're pretty much at. And I said, Jesus, Gary, I think it's going to be longer than that. I think it might be 12 to 24. And so for this conversation, and we went back and forth and debated it, but for this conversation, let's just say for the next 9 to 18 months, things stay exactly where they are. If you're happy with your production, then keep doing what you're doing. Right? If you're not, then you got to start thinking about change. See, because in times of change, and the times are changing, experience is your worst enemy. If you keep doing things the way you've done them in the past, you're going to keep getting the results. And not that you were doing things bad or wrong, but it's changing. And there's a lot of people who want to take credit for the mortgage broker's growth. But it's not a trade association. It's not a single big lender. It's not, any one brokerage firm. It's not any one thing that's happening. I'm going to explain to you why brokers are winning and why they're going to. It's simple. What work has to get done on every loan? They still got to be processed. They still got to be underwritten. They still got to be docked. They still got to be funded. This front piece I call consumer touch. Brokers do that. MLOs do that. That's where the loan gets originated. It gets prepared. Documents are collected from the borrower, and then it goes into underwriting. That hard cost there, just hard costs, about 100 basis points. Really hasn't changed too much over the years. Underwriting, docs, and funding, I call that fulfillment, about another 0.5%. So those are the real costs that go into the loan. Okay, then how is it that loans have gotten so expensive? Well, when volumes go down, you lose your economies of scale. You can't get as many through the widget. You still need staff. So costs go up. But the other thing that you have going on that's driving these, costs up are, how about licensing? How about compliance? How about the legal department? How about the MIS department? How about sales management? There are all these things that take place in an independent mortgage bank. Who does that in a brokerage firm? Broker owner. He's licensing, he's compliance, he's vendor management, he's accounting, he's all of those things, and very good also at originating, knows all kinds of things about product. And that's the person that the MLOs who work in these smaller companies that are, 2 to 10 people maybe, how they rely on it, and it's how they keep their costs low. Low cost producers always win. Brokers have more product, theoretically. They have more product, and they're agnostic to really where they send it, theoretically. So enter the need now for ready price. What is it that ready price does? How will it help a broker with its value proposition? Let's look at this for a minute. You got consumers over here. They're going to come to either brokers or IMBs or banks through either a website or the efforts of an MLO. They're going to deliver it to a lender. Either it's their own shop if they're an IMB retail company. But lenders have third-party origination channels where the costs are actually a little bit lower than they are in their own retail. And then they have correspondent where they buy loans. So what Ready Price does is it puts a technology wrapper on this relationship. Technology is supposed to make things easier. If you're a broker and you got to learn 30 different ways to deliver loans to 30 different lenders, all you've got is information. If you're using just an old school pricing engine, all you're getting is price information. Then you got to go off to the lender. Then you go, gosh, I don't know that lender. Or I can't deliver to that lender. I don't know what their website's. All these reasons why you can't, which has you not fulfilling your value proposition. So what Ready Price did was took that pricing engine and put it together with AUS decisions, with locking loans and delivery. Shop, lock, deliver, one place, one platform. Not out of your LOS in some marketplace that has 2 or 3 lenders and they're not even sure what they're doing in the platform. Not changing your LOS. Upload your 3.4 file, run your own AUS, get your own results. You now own them as the broker. They're not in the lender's platform until you release them and let them go. Send your request for a lock over without ever leaving the platform. Get your confirmation of lock back. Now you're ready to go. Upload your documents and off you go. You do it the same way no matter who the lender is. Shop, lock, deliver. That's value. And that's a game changer. And that's going to drive costs down because you've got a one-to-many process. You're doing it the same way every time. And now I could deal with more lenders because I don't have to learn 30 new systems. If I don't know lenders, you can get approved with them through our system. This platform is provided by the lenders on our platform. They give it to the brokers in order to receive the loan. And so we're going beyond that, look and then jump somewhere else. Think about hotels.com. Wouldn't be very good if you went and looked on hotels.com and then you had to go to, the Marriott's website to book your room, or the Hyatt, or if you're getting an airline ticket, you got to go to Liberia Air one day and American Airlines the next, and Qantas, and you got to figure out how to. That's the state of the mortgage brokers without this universal delivery portal. So there's my pitch. I know it's not a sale because sales require interaction where I got to get feedback and answer questions, but it was a pretty good pitch. So that was my pitch. Let's do something real quick. Let's see how it stacks up against my last couple of videos. Bang. All right. So we talked about, I hope you can see this, the principles of persuasion. Did I use reciprocity? Yep. Products provided by our lenders at no cost to the broker. Some value there, giving you something. Hopefully it means something to you. Scarcity. Brokers need to change. You can't just keep delivering your loans to 1 or 2 players. Sorry, you got to broaden your horizons. You need non-QM. You need buy-down programs. You need to learn more and more. You need to learn more about VA and FHA. You got to broaden it because you got to go after customers that aren't just refinancing for a lower rate. Authority. We took some industry facts, some pricing, some structure, showed you that, hey, we understand a little bit about the mortgage industry over here. Hope that was good. Consistency, staying on the same topic. Here we are, 3rd video on selling. I hope you like it because you're still here. That's one of the principles. And finally, social proof. And I used Gary Malice for that. So in this little presentation that took just a couple of minutes, I actually banged on the 6 principles of the sale. Look, so I wanted 2 purposes out of this. One, stay on point. Learn how to present what it is that you present. But second, I wanted to introduce people who don't know Ready Price to Ready Price. Thousands of mortgage brokers on our platform and beginning to deliver loans to lenders. Lenders are on our platform ready to receive loans. We're building a fantastic community. So if you're a mortgage originator or a mortgage broker that's watching this video, go to readyprice.com, get access to our platform for free, provided to you by one of our lenders. Anyway, I hope this is helpful.